Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Dr. Kim, good afternoon. Thank you for making time today.
Good afternoon, Devin.
Well, let's start with Wall Street, where on Monday there was a big bounce back despite concerns about rising interest rates. The S&P up by more than 1.5%, the Nasdaq up by more than 2%. It's earnings season right now, and the numbers are pretty good for most companies. What's the story in the global markets?
U.S. stocks and government bond yields rose Tuesday as investors positively understood the latest round of company earnings reports for signs that corporate profits are holding up despite inflation. Analysts expect profits from big U.S. companies to keep growing this year, even as costs rise. That has boosted up the bull case for equities at a time when investors are anxious over Federal Reserve plan to raise interest rates to fight inflation. Dow Jones Industrial average added 1.5%, and the tech-heavy Nasdaq Composite gained 2.2% on Tuesday. It was actually the best day in a month for all U.S. indexes. In commodity markets, Brent crude, the international oil benchmark, fell 5.2% to $107.25 a barrel. Natural gas also fell 8.2%, continuing a volatile stretch for the fuel market. In Asia, stock markets were mixed. The Nikkei 225 rose 0.9%, and Japan's yen fell to a 20-year low against U.S. dollars. In Hong Kong, Hang Seng Index lost 0.3%, while mainland China's Shanghai Index lost 1.4% today.
Right, and for our viewers, just on the screen now, the numbers there were backwards. The Nasdaq was the one that was up more than 2%, and the S&P about 1.6%. But Korean stocks started out lower this morning. By the afternoon, they'd broken into positive territory, but basically closing flat for the day on the KOSPI. It was a mix for the biggest companies. Carmakers doing okay, though. Tell us about the domestic market.
Even U.S. markets big rise yesterday. Domestic market shifted to the negative side in both of KOSPI and Nasdaq without a strong momentum. Recently, domestic markets are switching between 2 days rise and 2 days drops for months. The benchmark KOSPI marginally had negative return, and Nasdaq retreated 0.3% today. Most of large cap stocks were mixed today. Samsung Electronics gained 0.2%, and the second largest cap stock, LG Energy Solution, also added 0.2%. But the fourth largest cap stock of the Samsung Biologics dropped 2.4% today. In KOSPI market, institutional investor-led markets dropped with 161 billion won net sales. In Nasdaq market, the decline was led by also institutional investors, 220 billion won net sales. $1 exchange rate declined a little bit from yesterday at 1,236 won per dollar.
Well, Professor, with the World Bank and the IMF lowering their expectations for growth this year in the global economy, we see the Korean currency losing ground against the U.S. dollar, the exchange rate getting up almost to 1,240. Similar for other major currencies, and worse, in fact, for the Japanese yen. What's causing this flight to the dollar, and how do you see that playing out?
It is a fact that the key currencies get stronger against Korean won when global economy weakens with lower economic growth. As you said, Devin, IMF on Tuesday slashed its forecast for global economic growth by nearly a full percentage point, citing Russia's war in Ukraine and warning that inflation was now a clear and quite persistent danger for many countries. In its updated global economic forecast, IMF lowered its 2022 economic growth of South Korean economy to 2% range, while raising its inflation projection to 4% as energy costs surged amid the Ukraine crisis. So this complicated global economic situation is, broadly speaking, not favorable at all to Korean economy because Korea imports 100% of energy like crude oil, and and it is also one of the most foreign-dependent economies through huge export and imports. All this means that the $1 exchange rate will be further increased by weakened Korean won value over international investors' stronger preference on key currencies to avoid currency risk.
Right, and as you say, as the Korean won weakens against the dollar, there are inflation concerns. It all makes import prices go up in terms of won. That makes things more expensive for consumers and producers alike. How big of an impact do you see this having, and what might be done about it?
I'm glad that you raised this point, Devin. As we talked about, Korea imports all energy sources and major part of agricultural products like wheat and corn. The prices of these items have been increased much more than other items for the last 2 years. This is the main reason why we are experiencing over 4% inflation on year, which is the highest in the last 10 years. Another new and additional burden to domestic inflation is weakening Korean won or higher $1 exchange rate. For higher $1 exchange rate, we have to pay more dollars given the same amount of imports. And it therefore raises imported prices of everything from energy to automobile. So Bank of Korea should control domestic demand by raising the key interest rate. However, as we know, most of inflation factors are foreign factors or supply side factors. So the impact of higher interest rate to stabilize the inflation is limited.
Right, and that's going to be a crucial point as we watch what the new incoming Bank of Korea governor decides to do. Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.